The collapse of FTX is nothing new. While this situation is painful for shareholders, employees, and account holders, in the long run, it does not change this industry's promise. Enron came and went and had no impact on the energy markets. Bear Stearns, Lehman Brothers' demise had no impact on the long-term potential of American debt and equity markets.
The well-run crypto exchanges should hold user assets one-to-one. So user deposit Bitcoin, we hold it in Bitcoin, we move to a cold wallet, we keep some in the hot wallet. And people, they sell it. Now the Bitcoin belongs to somebody else, but we still hold it in the cold storage. People can withdraw 100% of the assets they have on Binance. We will not have an issue in any given day. So 100% of the users withdraw 100% of the assets, we'll be fine. This is very different for traditional financial people to understand because banks run on fractional reserves. And the traditional regulators, many of them may think that it's okay for crypto businesses to be running on fractional reserves. That is not okay. In crypto, there's no central bank printing money to bail out banks when there's a liquidity crunch. So crypto businesses have to hold user assets one-to-one. And that's what we do. It's very simple.
Hello, welcome back again. In this video, we're going to be talking about the Kevin already blames the Binance CEO CZ collapse about the FTX Sam Bankman-Fried. Hello, welcome back again. Subscribe to the Bitcoin Thinking channel and turning on the red notifications button. Kevin already has roped Binance into the infamous FTX scandal, claiming that the exchange deliberately caused the collapse. He also called for increased regulation in the industry, hinting that at the end of the day, only a proper laws will save the market. Fear and doubt from the investors still loom over the market as the FTX hearing proceeds. Sam Bankman-Fried, Alameda Capital, and now Binance, the blame game continue for FTX, which put market and multiple steps backward. Canadian businessman and the co-executive producers of the reality show Shark Tank, Kevin O'Leary, has blamed Binance for the collapse of the fellow exchange FTX despite its efforts to save FTX at the early stage of the saga. Speaking at the US Senate in the FTX hearing titled Why the FTX Bubble Burst and the Harm to Consumers, O'Leary used strong words to describe Binance's involvement in the FTX debacle. He claimed that the Binance caused its purpose and is now a massive unregulated monopoly. No. Explaining his views, he stated that the CEO of Binance, CZ, disclosed that the would begin to sell FTX native tokens on Binance, a move that led to the bankruptcy filing a few days later. O'Leary called for the more regulations around the industry to avoid a repeat of the ugly incidents and again investors' confidence. According to him, Ledger's X and FTX owns a derivative trading platform was the only entity that didn't go zero due to the Commodity Futures Trading Commissions and the regulations. FTX spokesperson Shark Tank's co-host Kevin O'Leary blames competitor for the firm's collapse in the Senate hearing. Kevin O'Leary, and investors and the judge on the Shark Tank, who was paid $15 million to act as a spokesman for FTX, testified before the Senate Banking Committee on Wednesday about the crypto exchange collapse. O'Leary has said as an investor he lost all of the money he was paid to act as a spokesman for the exchange, which fell apart in November, costing investors millions in losses. FTX founder Sam Bankman-Fried was recently arrested on the charges that the misled investors and mishandled billions in the fund. He has been accused for the misusing customer funds disposal and with FTX to boost his crypto hedge funds Alameda Research. O'Leary was among a group of the celebrities including Tom Brady and Larry David who are sued by the FTX investors of their promotions of the firms. He said they put roughly $9.7 million into the crypto from the $15 million deal. The rest went to the tax and the agent fees, he said that. Senator Pat Toomey asked O'Leary on Wednesday why he believes FTX failed. Investors Kevin O'Leary says Binance put FTX out of the business intentionally in a Senate Banking Committee hearing on the cryptocurrency exchange collapse. Binance is a massive unregulated global monopoly now. They put FTX out of the business. O'Leary recounted reaching out to the Bankman-Fried after the investors discovered his accounts were stripped out of their assets and accounting and trade information. What's the Kevin O'Leary thoughts on the FTX collapse? Let me explain that. In the testimony written by O'Leary to the Senate Committee on the Banking, Housing and the Urban Affairs, O'Leary said that there was a need to investigate what happened with FTX and get to be the bottom and what had caused the exchange collapse. However, he said the fallout should not cause the abandonment of the entire crypto industry. O'Leary has also shared his hypothesis on what the beliefs caused FTX fallout and the exchange bankruptcy. His arguments are that of the Bankman Fried are somewhat similar, as the latter continue to believe that is no criminal liability. Bankman Fried was recently arrested in the Bahamas after the US government files criminal charges against him. The FTX founder is facing multiple criminal charges, including wire fraud, securities fraud, and election frauds. However, in this testimony, O'Leary did not mention anything about the charges facing Bankman Fried and his misuse of the customer funds. Instead, the belief that the FTX fallout was caused by the Binance and its CEO CZ. O'Leary said that FTX was one of the largest competitors. Binance were at war with each other and one put the other out of the business intentionally. The Shark Tank investors added that with FTX going under, Binance was now an unregulated global monopoly. Before the FTX exchange filed to the bankruptcy, Binance CEO had taken to the Twitter to say that it would sell all of its FTT holding because of some revelations and that had come to the light. CZ said that hacked out of the possible deals to the core FTX, saying that the issues facing the exchange were beyond Binance control. A few days before CZ tweets, a report by the CoinDesk had poked holes into the balance sheet and amid the crypto hedge funds the Bankman Fried also founded. The company's balance sheet showed that it held many liquidity tokens issued by the FTX. While these events could have accelerated the collapse of the FTX, there is no evidence that Binance played a hedge fund managers, given to the mounting the evidence that FTX misappropriate customers' funds. Binance CEO CZ joined CNBC Squawk Box to discuss how the company is working to avoid a major fallout similar to the crypto exchange FTX. That is for today. If you haven't already, subscribe the Bitcoin Thinking channel and turning on the red notifications button. So see you next time.